My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today we got a guest who's been on the show before. I'm looking forward to chatting with Tom Dunkel again. Tom is a very, very experienced real estate investor. He's been in the game for, I believe, over 30 years, one way or the other, and is an active investor, as a capital raiser, as a coach, as an author, you name it, Tom's doing it. So Tom, welcome back to the show.
Hey, Dave, it's great to be with you once again, my friend. Hope you are well and looking forward to our time together today.
So Tom, we're mid-2025 as we're recording this right now. Mm-hmm. What are you focusing on these days as far as deals?
Sure. Yeah. I can't believe you just said that, but I guess it's true. Yeah. The year is flying by. It's been a challenging year for sure. 2024 was difficult as well. But, what I'm focusing on now these days, Dave, it was a little different from when we were together previously. So yeah, I spent the last 5 years as the chief investment officer at Belrose Storage Group. So I was, deep into the self-storage industry. Yeah. Yes, exactly. Which was great. We built a 8-figure business there. We raised over $20 million of capital from that business. But I told my partners years ago, actually, that I said, hey, at a certain point, I'm going to want to make a shift and do my own kind of capital raising as what we call a fund of funds model. So in other words, raise capital from my network of investors and place that capital not just with Belrose Storage Group, but I've in my journey met a number of amazing world-class operators across multiple asset classes, multifamily, medical office, mobile home parks. I'm a big fan of lending strategies as well. So I figure, part of this, Dave, to be fully transparent, is I'm actually the old guy on the Belrose team. So I'm looking to work a little less and spend a little time, enjoying things. So I figure, well, I'm going to be looking for these passive investment opportunities for my own portfolio. Yeah. Why not tag along? Why not have the investor community that I've developed over the years, give them an opportunity to tag along with me? Because I have, as you mentioned, I have been doing this over 30 years, investments, finance, real estate, that sort of thing, the last almost 20 as an entrepreneur. And hey, if I can help out my investors and help them to get into good deals so they can keep doing whatever it is they're doing, running their business or building their practice, whatever it is, that's a win-win, right? I can help out some people, place them in some deals that are making a lot of sense, and everybody wins. And so I think now is a great time to be looking at real estate, especially because the stock market just is going up, 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 up. So I've been encouraging people to take some money off the table, take some profits off the table, and put them into more stable, cash flowing, hard assets like multifamily, like self-storage, and like lending. So that's kind of what I have been up to recently, and that's kind of my view of how things are right now.
To synthesize that, to make sure I understood it,
sure.
You've gone from being like a really active guy in the self-storage side of things. You want to take it a little bit easier, but still invest passively in people's deals. And over the 30 years, you made a lot of connections with investors and with operators. So now you're going to kind of get double bang for your buck, because you're going to be vetting opportunities from people that good opportunities outside of not just self-storage. And then in addition to investing yourself, you've created a fund to fund to bring your investors along for the ride, so you can kind of bring more capital to the table, potentially get a bigger slice of the pie, more preferential returns, that sort of thing. Am I getting the gist there?
You're spot on, Dave. Exactly. That's exactly right.
So maybe explain to folks who aren't familiar with it, what is a fund of funds? What does that actually mean?
Sure. So It's really pretty simple. So take for example, when I was the chief investment officer at Belrose Storage Group, we would do what's called a syndication, right? You have a
Hmm.
very sophisticated audience. They're probably familiar with what a syndication is. So when we were buying a self-storage facility, we would go and raise the equity portion of that acquisition capital. So let's say we were raising, 2 million bucks. So we'll try to find 20 investors to put up 100 grand each kind of thing. So that's called a
Got it.
syndication. And
Yep.
so that was Belrose Storage Group going, directly out to our network and raising that capital. Well, what you can do as a fund manager, which is my new role, is I could go to Belrose Storage Group and say, hey, I know you're trying to raise this 2 million bucks. If I bring $500,000 or $1 million, if I bring a bigger check,
Yeah.
would you give me better economics? And
Yeah. So
so
instead of them, having to find whatever it is,
20,
twenty,
$100,000
20 at 100
investors.
grand, they have to find you and then 10 more guys.
That's
That's,
right. And
yeah.
so there are more and more operators out there who are working with fund managers, and they are more than happy to give better economics. So as an example, I was just involved in a transaction recently where the 50, $100,000 investors were getting a 7% pref and a 70-30 split. Well, as I brought in over $500,000 of capital, and so that operator agreed to give us 8% pref and an 80-20 split.
Hmm.
And so what that allows me to do is actually share some of that with my investors so they get better economics going through me than if
Hmm.
they went to the operator directly. And there's still a little something in there
Well,
left
there has
over
to be.
for
I mean,
me
it
to
only
make a
makes
couple
sense.
bucks for
Yeah. Yeah.
putting the deal together. So it's a
Yeah.
win-win all the way around.
Yeah. That makes a lot of sense. Okay. Sounds good. Now, the fund of
Mhm.
funds, Tom, if I understand correctly, you can kind of have many, well, it's a fund of different funds kind of made up in
Mhm.
it. So you can kind of have, depending on how it's set up, you can have like a sub fund within that that's one for one particular deal and another one that's for another deal. Is that kind of how it's set up?
Mhm. There are different structures.
Okay.
I use a structure which is just there's one fund for each opportunity. But I actually do have some friends who are doing a fund that is more multifaceted.
Hmm.
Um, but for just streamline reasons, and actually I feel personally, not to go like down a legal rabbit hole, but
Yeah.
I
Yeah.
feel it's more compliant and it aligns my interests better with my investors if we just go, one fund for one deal.
I would imagine, yeah, would because it seems like there's a danger of mixing things up and kind of cross-pollinating a little bit too much if you got too many different funds in one fund or too many different deals in one fund.
Yeah, confused mind says no, so I
Hmm.
try to just keep things pretty clear as to what the goal is for that particular
But there must be like
opportunity.
a minimum amount because there's expense involved with setting up a fund and running a fund and
Oh,
managing a
sure.
fund. And so there must be like a minimum amount to make it worthwhile. What have you found has been like the minimum?
There is. Yeah, no, you're exactly right. There are some upfront costs because so in the example that I shared, so
Yeah.
Belrose Storage Group, when they go out to do a syndication, they have their set of offering documents, right, that are put together by an attorney. Everything's buttoned up legally. Well, as a fund manager, if I'm raising 500,000 or $1 million for that syndication, I have to get my own set of legal documents too.
Yeah.
So there is some upfront costs, and I have my investor portal and some of those back office kinds of things that cost a couple bucks. So yeah, so the minimum is really about that 500,000
I would think.
level.
Yeah. Mhm.
Obviously the more the better. If I can raise 1 million, or my goal is to be able to raise $2 million for each opportunity that I'm looking at.
Mhm.
And so that way you just get to spread that cost over more dollars, and it just works out better.
What have you found to be the major differences talking to investors and raising capital for a fund versus what you were doing before for a syndication? Is it more complicated
Mhm.
to explain it? Is it easier to sell? Is it more difficult to sell? What have you found so far, Tom?
Yeah, yeah, that's a great question because, like I mentioned at the beginning, I've always been more investor minded than kind of deep asset class
Yeah.
minded. So I've always been looking for good deals. So even though I was deep in the self-storage industry, I was still doing my private lending. I was still investing as a passive investor in multifamily. So for me, it's been a pretty easy transition because I know that our investors, even though they might come to know, like, and trust us at Belrose Storage Group, they're looking to diversify. These are sophisticated investors who are accredited and they've got, multi-million dollar net worth. And
Yeah.
so if I just keep coming to them with self-storage, 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 it's not, at a certain
You want
point,
to
they're
add
going
a
to
few
say,
more
hey,
things to the menu, a few
yeah,
more items to the
I've got
menu.
enough self-storage.
Yeah.
What else should I be adding in to really get true diversification? So again, that's where I have my investor hat on and I'm
Yeah.
thinking, okay, I want some multifamily and I want to be geographically diversified. I want to be asset class diversified. So I feel like that message resonates, Dave, with the investors that I've been working with.
Okay. Yeah. No, that makes a lot of sense. Now, when it comes to filling up your fund with investors and their capital, you've got an amazing Rolodex, but I imagine you're probably also trying to generate some new investor leads and things like that. What are you doing these days to do that?
Yeah, yeah. I'm always looking to build the investor list for sure. Um, so what I've been doing recently, and what's really, I guess a couple things
Yeah.
I find are really have a nice bang for the buck. Number one is I've probably been on close to 100 podcasts as a guest
Nice. Yeah.
to this point. And so just, being on podcasts and being out there and sharing my story, it just helps people, listeners to learn more about me. And so as kind of the face of Belrose Storage Group and now the face of Eagle Capital Investments, it's just a way for people to get to know me. So, at the end of the show, I'll give you my website. We can reach me. I'm sure it'll be in the show notes and all that. So we get a lot of investors that come into our investor portal and when we ask, there's an intake sheet that says, where did you learn about us? And
Yeah.
more often than not, it's I heard Tom on a podcast or I met Tom at an event. So,
Okay.
going doing that face to face stuff. But the other thing, Dave, which I'm excited about, is something new for me, which I wrote a book recently. So,
Congratulations.
yeah, thank you. I'm super excited about it. It's called The Wealth Builder's Playbook. It's the elite investor's guide to living life on your terms. So it's basically just a series of stories. I'm a golfer, so I got a lot of stories in there about, these are all fictional stories, but it's like, the guys are out on the golf course and they're playing, they're talking about their investments, and one guy's like feeling like he's got FOMO, right? He's got fear of missing out because the other
Yeah.
guys are investing in, multifamily and private lending, and they have these stable, great portfolios throwing off cash flow and tax advantages, and the other guy feels bad. So anyway, I got a bunch of stories in there. About that. But it was a really fun process. It's exciting, and to the point where I'm actually looking to do volume 2, because in the first book I covered a certain set of asset classes, and there's more out there that I want to share. So my second book is going to go into the next set of asset classes,
Okay.
but
Cool. So, yeah.
it's just kind of fun, and again, it's just another way for people to get to know me. It's a great calling card if you meet
Oh, so you
somebody,
got
say,
physical copies of the books too. Yeah,
yeah,
that's
yeah.
smart.
So
Yeah.
you can say, hey, here's my book, or sign up on the website. You can get a copy of the book mailed to you, kind of thing. So it's a pretty cool. I guess it's kind of a top of the funnel if we're talking marketing lingo, right? It's
Yeah.
kind
Well,
of a
let's talk
top of the
market. So,
funnel.
how do you get eyeballs to see the top of the funnel? How do you get eyeballs to see the book?
Sure. Well, I talk about it on podcasts,
There you go. Yeah.
and then social media, of course. So, I've been on LinkedIn quite a bit, and that's been pretty good. I have to
Mhm.
say, it hasn't been great at really necessarily converting,
Mhm.
at least for me. I know people. There are some people out there, some friends of mine are converting a lot. They're working through the DM function on there to actually have conversations, and they're getting calls with investors and such that way. But I guess I don't know. I probably haven't been working at it hard enough to get to really see the results there.
Yeah,
But I am also now exploring because it's a learning process, right? So even though I've
of
been at
course.
this a long time, things change all the time. So I'm still learning and exploring. So my next thing that I'm going to be tinkering with is a YouTube channel,
Okay.
and just putting out some short form educational content. And so, and again, kind of posting that, trying to get that top of funnel, some of those easy clicks, which will get people into the middle of the funnel, where the middle of the funnel is more about the book. I'm actually
Mhm.
developing a course too, which will be middle of the funnel. Um,
Yeah, so top of the funnel
yeah.
is people opt in to get your book.
Hmm.
Now you got your
Hmm.
name, you got their email address. So the
That's
middle of
right.
the funnel is okay, how do you take them from asking for your book to booking a call with Tom to actually talk about investing, right? That's what the middle of the funnel is, correct?
That's correct. That's
Okay.
right.
Yeah.
That's exactly right. And believe it or not, Dave, sometimes investors they'll skip the whole booking a call, and they'll immediately they might invest right away into an opportunity. That's pretty rare. But I
Hmm.
guess the point I'm trying to make is, if your mid funnel is chock full of value, and you're really giving some good information, some good value out to your community, then they end up converting themselves. And so you don't need some, hard, sales conversation over the phone. I mean, I still need to do that sometimes, because of course investors have questions and I want to make sure they feel comfortable about what they're doing. But
Yeah.
it's happened in the past where they skip the call and they go right to the deal because they've learned so much through the other parts of the
So what
funnel.
does the middle of your funnel look like now? Is it email communications? Is it what does that look like?
Hmm.
How many emails? How often do you send them out? Just give us an idea of
Hmm.
what that looks like.
Sure, yeah. So once they come in the top of the funnel, there's a six or seven. It's always, always kind of tinkering with it, but there's like a
Hmm.
6 or 7 email series that they'll get over the next couple weeks. And the call to action there is typically, book a call, book a call, book a call.
Yeah.
And then if there's any other kind of interaction, if they click through, um, and want the book, or I have another ebook resource, or they in a minute here, I'm finishing up a course right now. They can have an opportunity to go through a video course, which will
Hmm.
be probably 6 or 7 modules. But if they're clicking through all that stuff, then it clicks them into a longer email series, which it goes over a longer period of time. So,
Hmm.
I mean, until they say no, they're going to keep hearing from me.
Yeah, yeah, yeah. No, that makes sense.
Yeah.
Very, very exciting. So, Tom, what are the plans for the next 12 months or so? Where do you see your business going?
Sure. Well, we're in a pretty uncertain time right now. There's all the stuff about tariffs and the big beautiful bill, and there's a lot of things. No one's really quite sure what direction interest rates are going to and when, and that
Hmm.
kind of thing. So I have to say that even though I'm still placing dollars strategically and selectively in the multifamily space, one of the things I really like right now is private lending. So I've been doing private lending for, geez, over 10 years, probably longer. And what I like about that is it's pretty darn straightforward. And so what a deal looks like in that world is, Joe Sixpack, who's buying a 3 bedroom, 2 bath house. He's getting it at a discount. It needs a lot of work. He's going to fix it up and he's going to sell it. So let's say he buys
He's a
it for
flipper.
200.
Yeah.
He's a fix and flip guy, right? So
Yeah.
he's buying it for 200 grand. He's going to put 75 grand into it, and he's going to look to sell it for 350, $400,000. So that kind of borrower, a lot of times a bank isn't going to move quickly enough, even if they have good credit.
Yep.
A bank, especially these days, there's a lot of scrutiny, a lot of hurdles, and there's uncertainty right up to the closing table.
Yeah.
Whereas if he comes to a private lender like me, where when I bring in my investors, we can partner together. I can send them a check or wire them funds for 250 grand over the matter of a few days, especially if we
Hmm.
already have an existing relationship. If it's
Yeah.
a first time borrower, there's going to be more of a due diligence and underwriting process. But once I get to know the borrower, and I do this now with a handful of borrowers who have done many deals with over the years. You're making a loan on a property, so it's a first position mortgage, right?
Yep.
So you're secured by the property. So if the project goes south, you can still jump in, sell the property, and recover your principal. But I'm typically getting paid, 10%, 11%, 12%, maybe even a couple points, and I'm getting a check every month, which is great. And then
Yep.
when the property sells, I get
You
my
get all your
principal
capital back.
back. And
Exactly.
so it's very simple, straight. I'm sure everyone out there listening has been a borrower themselves. So just flip it around. Now you're the
Yep.
bank, and
No, yeah,
you're
no, it's
secured, and you're the one calling the shots, and they are paying insurance on the property. So if it burns down or something happens, you actually get
yep.
repaid. So they're paying for you to be protected. So anyway, there's a lot of things I really love about private lending, especially right now because things are kind of uncertain. But the real estate market is has come back. The residential market, it's pretty. I'm here outside Philadelphia, and it's doing pretty well here. My mom's down in Florida. She actually just sold her house, and it sold right away. So I feel like depends on where you are, what market you're in. So you want to be
Yep.
careful about that. But I feel like private lending is a great place to be, during this, kind of crazy time we're in right
Topsy
now.
turvy time. Yeah.
Mhm.
Awesome, Tom. If people want to get a copy of your book, what can they do?
Sure, Dave. Hey, this has been great, buddy. Appreciate it so much. Again, I'm Tom Dunkel. I'm the managing principal at Eagle Capital Investments, and you can find my book at investwitheagle.com.
Awesome, Tom. All the best, and thanks for being on the show again.
Thank you, Dave. Take care.
All right, everybody, take care. We'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.